Hey everybody, I hope everyone is doing well and had a good day. Thanks for joining me for today's end of day review of the Emini 5-minute chart for Tuesday, February 10th, 2026. Just quickly, the daily chart. Context going into the day. Price action is fractal, so it doesn't matter if we're looking at the 5-minute chart or the daily chart. We read the price action the same way. What's happening here? Market's in a trading range. There were 3 legs down to support. And we had a strong bull breakout. And the breakout had follow through, but the follow through bar is a lot smaller than the breakout bar, which is an indication of waning momentum. So the bulls are getting weaker. There's less buying happening. And we're also back at the top of the trading range. So down here, 3 legs down to a support area, we found buyers, but we basically had a buy vacuum test of resistance. And now the market price is back at the top of the range. You have a small, it's subtle, but there's a bear trend line here, but also just the general upper third, the top of the trading range is a magnet and it's resistance. So the expectation for me going into the day, after a bull breakout and a smaller follow-through bar with a lot of bars overlapping to the left and being in an area of resistance, is that the upside today is probably going to be limited. And then if we take a look at the 5-minute chart again, going into the day, we talked about major trend reversal yesterday. For a major trend reversal, you need a trend line break, and then a test of the highs, and then maybe you get a major reversal. And we have some of those things from yesterday. We have a bull trend, a trend line break, test of the highs, and the market is now in a trading range going into the day. So breakout direction could be to the upside or the downside, but right now it looks like we are in a trading range, something like this. So expectation, how to handle it: buy low, sell high, and scalp. Leg counting, very important. So maybe this is a general area of support up here, accepted as resistance, and then we can read the bars. I'm going to keep it short again today, so rather than go bar by bar, we'll take a pretty decent chunk of the chart at a time. What happened on the open? Gap up, and the bulls got a minimum follow-through bar, a bull close, but it's a weak follow-through bar. It's actually a sell reversal bar because it closed below its midpoint. So even though it had a bull close, it closed above the open. It's actually a more bearish bar. A lot of more momentum going into the close of the bar. On a smaller time frame, you'd see a bear breakout. It's actually a reversal. Market rallied and then sold off. So a reversal into the close of bar 1. And where was the market testing? It's testing resistance back at the top of the trading range. Breakout point, bar 68 or bar 69 lows from the bar 70 breakout follow through. So these are areas of resistance. And what happened? Market rallied there and found sellers. There's also, you can consider it 2 legs up. 1 micro channel, pullback, double bottom, and then a second leg. So 2 legs up to the top of the range, we found sellers, big reversal down bars 2 and 3, but notice the tails on bars 2 and 3 and count the legs. It's probably a nested 3 legs down if you look at it, something like that, 1, 2, 3, but also bigger picture here or here. Don't want too many lines on the chart, but here's your nested wedge. 1, 2, 3 legs down. 1, 2, 3. Testing support to the left. Maybe this inside bar again. So market finding support. 2 pushes down on these 2 bars alone. Down on 2, up on 2, down on 3, up on 3. Attempt to go down on 4. And then an inside trading range bar. And it's at support. So if you had to choose to be long or short here, after 3 legs down, nested near support, and then you have an inside trading range bar, it's always in long. So traders on the close of bar 4, they can buy the market, they can buy above the bar. It's not the greatest signal bar, and you're buying after 4 consecutive bars down, but the context supports higher prices. For the reasons I said again, 3 legs down, nested to support in a trading range. And the microstructure also suggesting that the downside is probably limited. It doesn't look like traders are selling aggressively. It's enough of a sell-off that it will limit the upside, and maybe the bears will get a second leg sideways to down. But after getting bar 5, that bar needs a second leg, so it's always in long on the close of bar 5. It's difficult because it's always in long 5, but look to the left, we're back at resistance in the trading range, so not ideal for buying. And then 6, kind of similar to the daily chart, big breakout bar, smaller follow-through bar. So looks like momentum is getting weaker, and we're at the top of the range. So buying here, not ideal. Buying a pullback would be better. Still, second leg up likely. Bulls get a micro channel to bar 8, pullback bar 9, but second leg likely, so first reversal likely to be minor. Looks like about a 50% pullback. And if you actually use the breakout bar alone or the breakout follow through, maybe that's a little more accurate, but either way, even if you use the entire rally, it's about a 50% pullback, finding support on bars 9 and 10. Bulls get a second leg. You take the breakout alone because 6 is a weak follow through bar. It's more of a trading range bar to me. So bar 5, strong breakout bar. You can see the bulls did reach a symmetrical second leg based on the size of the breakout signal. So minor reversal, 9, and then second leg from the low of 9 to the high of bar 11. Tight trading range up here, lots of overlapping bars. Breakouts are failing, it's a limit order market. Buy low, sell high, but big picture, we're at the high of the trading range, and you can even call it a bull channel. High, higher high, higher high, but resistance. So not great for buying up here. Bulls had their rally, pullback, second leg. Now it's a tight trading range. Better to look to sell, but also better to wait for the breakout. So hard to trade. Not ideal for trading through here, but probably always in short based on context. We're at resistance and trading range or a broad channel. You trade them both the same way. Buy low, sell high. Bears get a micro channel. Finally, a strong breakout bar on 20. The structure again suggests a pullback is more likely. You've got 3 pushes down. 1, 2, 3. You're getting the strongest breakout bar on 20 after 5 bars in the micro channel. So a pullback is likely, but it's a micro channel. And the context is good. It's selling off from the top of a trading range. So second leg down likely, okay to sell, but you might have to scale in since a pullback is likely. There's the channel line I'm talking about. So it's breaking below a channel line in a third push. So you can expect a correction, but then ultimately a second leg down. So minor reversal likely, second leg down likely. So selling and scaling in is okay. Tight trading range again through here. Now more in the middle of the range. That's really not ideal for trading. Better to wait for something more clear. So probably okay to buy bar 29. Maybe it's close enough to support, but it's such a tight trading range that it's really not ideal for taking stop orders. If you take stop order trades in a tight trading range, you can get chewed up pretty bad, pretty quickly. Pretty decent breakout, 32, follow through 33, although a much smaller follow through bar. Some resistance here. This breakout still probably will get a second leg. So as we rally, keep in mind that we're testing resistance, and different areas of resistance include this breakout point, basically the high of bar 20. So that's probably resistance. There's a bull channel line here. And then even if we rally up here, the top of the range is still resistance. This looks strong enough, 32, 33, looks strong enough for a second leg. First reversal down probably will be minor, but the risk for the bulls is that it's already 2 or 3 legs up and at resistance in a fairly tight trading range. Buying 33, not ideal. It's that familiar thing we've been talking about. Decent breakout bar, but a much smaller follow-through bar. And then 35, pretty strong bear breakout. Context supports a second leg down. This is possibly a trap. Bull breakout bar, smaller bar, even smaller bar. So this will probably, it's a strong enough rally for hesitation, but there's probably sellers in the sell zone of 35, and 35 will probably get a second leg down. So there's the hesitation. The bulls ultimately get a second leg, but then sellers above. It's almost like it's a major trend reversal on a smaller time frame. It's kind of, you have to use your imagination, but from the low of 31 to the high of bar 34 is a bull trend. And it's a breakout. It's a micro channel, so on a smaller time frame, it is a bull trend. And the bull trend line is somewhere around the low of bar 31 or 32 to the low of 34, connecting these lows. And you can see 35 broke the bull trend line and even got a second leg in the form of a micro channel. So that's a tight bear channel on a smaller time frame, pulling back about 50% of that rally and clearly breaking the trend line, which disappoints traders who bought at the high and creates resistance up here. So the traders who bought, say you bought the close 34, disappointed 35, you're trapped into a losing long position, and that creates resistance and encourages bulls who bought to scale in and then sell out of longs at the high. So if bulls are selling and bears are always selling, then there's no one left to buy. The market has to go lower to find buyers. 4-bar micro channel, bear breakout. It's a bear breakout on 41, but it's weak. 42, also weak. 43, finally a decent breakout bar, but still a tail below. But 43 is probably close. Maybe one more bar, but it might be sell to close 43, and then certainly sell 44. Second leg down, likely. This sell-off could be getting a delayed second leg. Bad buy signal bar, the inside bar 4. Tested it a couple times, but that's another magnet we could be going back to. Also, the current low of the day is a magnet. More follow-through selling, maybe a measuring gap on 46. As we get closer to support, it's hard to stay short, but this is strong enough for a second leg. Minor reversal, likely. Let me speed it up. I don't mean to go bar by bar. Another strong breakout bar 48. This entire sell-off is a micro channel, and that's very strong. And it's very likely that it gets a second leg down. So you can see we finally got hesitation at the new low, but even there, 48 broke out to a new low, broke out and closed below many bars to the left, and then got follow through 49. Could be a stronger follow through bar, but at least it's follow through. Both bars closing below all these bars to the left. So maybe we're breaking out of that trading range I was talking about at the beginning of the video. Trading range something like this, and the market's breaking below it. The one problem here is distance. The bears have not put big distance between the breakout bars and the low of the range, especially if you use the tail of bar 3. It's hardly gone anywhere, but a lot of momentum through here. And this is controlled, sustained selling. So Yes, it's possible. It's a leg 1 pullback, leg 2 second leg trap. Also testing this channel line. And you see some support here. There's a minor reversal, but it's not enough to reverse this. Second leg down, still likely. So tight channel. We are testing breaking below the bear channel line, and it is a trading range day. It's probably not going to break out into a strong bear trend day, which means the downside here might be limited. Second leg down likely, but also pullback likely, because we're testing support on what's clearly a trading range day. 54 is still probably a minor reversal. It's a bull breakout, but not breaking out of much to the left. It's enough for a small second leg of its own, which means selling 55. If you're selling 55, you need to expect another small second leg up before you get resumption. Two-legged pullback, bulls get their second leg, testing resistance. I'm so in the habit of going bar by bar that I keep saying I'm not going to, and then I end up doing it. You can see what happened. It's kind of a trending trading range today. There's a tight trading range up here, followed by a bear breakout, and then another tight trading range. Tried to break to the upside, failed, broke to the downside, another tight trading range. Trading range here, trading range here, trading range here. Still a second leg down likely. This is all a minor reversal, but the more bars that get added, the better for the bulls. But the buying pressure through here, show me the consecutive strong bull breakout bars. 50 is a decent bar, but not especially big. 54 is a big bar, but no follow through. 59, average size bar. So the bull's really never getting follow through. Bar staying below the moving average. It looks like the bears are in control, and they're keeping the pullback relatively shallow. It's certainly not a 50% pullback of that sell-off. So still second leg down likely. It looks like a low 1, low 2, maybe low 3, maybe even a low 4. On bar 67, outside down. Reasonable stop order swing trade. 69 bear breakout you can sell. 70, what about 70? 3 legs down, 2 support. So it's possible it gets a second leg. My concern is the bigger picture structure, that this bear breakout leg is going to get a second leg similar in size, and it has not gotten it. This doesn't look like a major reversal to me. Then we just had this 3-bar micro channel, bear bar, pause, bear bar. So it's like a tight channel on a smaller time frame, getting about a 50% pullback, maybe a little bit deeper. So you're at resistance again. You're at the moving average, and you're in the upper third of this tight trading range. So 70, it's a good looking bar, but not the greatest context to be buying. Reasonable sell below 71. Nothing to buy here. Sell the close. Yes, you're selling near the low. But again, the expectation for me is that this sell-off gets a second leg similar in size to the sell-off, to the signal, the breakout. Is 75 a major reversal? No. If anything, sell above that bar. Good looking breakout bar, but again, average in size. It's below the moving average. It's again, about a 50% pullback of the prior leg. So that's still the close bar. Getting a little climactic. Okay to take profits. 77, but probably a little more to the downside likely. We have that leg 2 magnet. 78. Looks like 78 reached it, and you can see the reaction, profit taking at that price, but still a minor reversal. All right, that's going to do it for today's end of day review. Thanks again for watching, and if you stuck around to the end, I want to encourage you. I have plenty of helpful resources in the description. I have links in the description of my videos that you can check out, and they should all be helpful on your journey to becoming a successful price action day trader or any kind of trader through price action. All right, thanks again, and I hope everyone has a great night.